Okay. Right. Well, welcome to the latest in our Retire Abroad virtual roadshow. Today, we're looking to give you information on the financial issues that you need to consider as you plan your retirement to Portugal. Although everyone's situation is different, there are a number of sort of principles and rules that everybody needs to understand, and we'll aim to make you aware of those today. My name's Nigel Ayres. I'm the I own and run. Sorry, I don't own it. I own some of it. Expat Network. I've lived in Hong Kong, the US, and Malaysia, and for the last 3.5 years, been in Spain. We're joined today by Matthew Christman of Blevins Franks, and he will introduce himself in a moment. And before we start, just to remind people that you can ask any questions, please use the button on your screen, and we will answer those during the course of the webinar. Any that we miss, we'll send you an email after the event. So perhaps we could start by introducing yourself, Matthew, and telling us a bit about Blevins Franks.
Okay, thank you, Nigel. Good afternoon. My name is Matthew Christman. I'm a partner of Blevins Franks. I have worked as a financial planner for the past 28 years. I'm 50 years old. I've lived in Lisbon for the past 20 years, as I'm working in the same role. In terms of Blevins Franks, we've been in Portugal for the last 45 years. I've been here a long, long time. And we have offices in 7 different countries, the UK, France, Spain, Portugal, Malta, Cyprus, and Monaco. But I'm very much part of the Portugal team. In terms of the advice that we provide at Blevins Franks, it is cross-border tax, investment, and pension advice for UK nationals, either moving to Portugal or to our other key jurisdictions. And really, a typical client of ours will start the journey with Blevins Franks in the UK because we have a UK arm, and we can provide a lot of financial planning and tax advice before people leave the UK tax net. But on top of it, people moving to Portugal and retiring here and staying in Portugal long term, then we provide that ongoing service and advice.
Okay, thank you, Matthew. Okay, we'll start off by talking about the financing of retirement in Portugal. Mm-hmm. Many will be financing their retirement through state pension, private pensions, personal investments. Mm-hmm. Dealing perhaps just with the state pension quickly, I could probably talk from personal experience there. I was in Spain when I reached the pensionable age and therefore applied for my pension. If you're already receiving a pension in the UK, the state pension, then it's relatively straightforward. You can either continue to have it paid into your UK account and transfer it across, or you can have it paid into an account in Portugal. Now, in my case, I looked on this website for the International Pensions Department to apply for my pension, and the form is an interesting one because it starts off by saying, have you ever lived in England or in the UK? It then asks you to list all of your employers in the UK and all of the addresses you've had in the UK. And personally, I'm on my 26th home. That wasn't a very attractive proposition to list all of those homes. Not all of them were in the UK, of course. So what I did instead was picked up the phone. There's a number that you can call, and then there's a relatively straightforward series of questions they ask you. And then you go into the system, and in theory, all is underway, and you will duly get your pension when you reach the correct age. So you can do that in advance. In my case, I waited 3 months and nothing happened, so I picked up the phone again, rather later than I probably should have done, and they said, looking at your file, nothing has happened. Apologies. So at that point, I said to them, they said, okay, we will put you on the urgent list. And 1 week later, it was all sorted out, and my pension sort of was confirmed and all the rest of it. So the state pension is relatively straightforward, but I do definitely advise you to use the phone. I don't know whether there's anything else you'd like to add there, Matthew, about...
No, that's good advice, Nigel, and that's very handy for people to know, yeah.
Yeah. So looking at the private pensions, should they leave them in the UK or transfer them across? What's your general advice on that?
In terms of private pensions, of course, every individual's different, and we offer pension advice on it, but you have the ability when you move to Portugal to either leave the pension in the UK or move it to an EU version of a UK SIP. It's called a qualifying recognised overseas pension schemes. And really, for the benefits of that is that if you're looking to retire out of the UK long term, then basically you can get your pension outside the UK system and protect yourself against any future UK tax changes or changes to UK pension legislation. On top of that, you can set yourself up a euro-based income from that pension from a Curops. If you're spending euros, then you can get rid of that currency risk. And for those of you looking to retire overseas long term, there are advantages for your children upon your demise in terms of children drawing down from as beneficiaries of a pension. With UK pensions, there's tax at their highest marginal rate, whereas if you've been away long enough with an overseas pension, then there's tax advantages for your children. So that's something worth looking at, and that's something that we provide ongoing advice for everyone's particular situation.
Okay, perhaps I should just sort of step back a little from the pension. We'll come back to that at a moment. When people are sort of planning their move abroad, when should they start planning, and are there a lot of issues they need to deal with before they leave the UK, or can they wait till they get here?
Well, that's a very good question, very relevant question, Nigel, because there's a lot people can do before they leave the UK tax net. And this is advice that we provide. I mean, just to give you examples, some people, it would be good for them to take a pension commencement lump sum before leaving the UK, because that's tax-free in the UK. Other areas, they need to look at their investments and ISAs and other areas, because there's potential for taking advantage of unused capital gains tax allowances. And on top of that, something called the statutory residence tests as a lever. People need to know their ties with the UK after leaving, so that knowing the amount of days they can spend in the UK after leaving. All of these areas, people really need to get their ducks lined up so that they step into Portugal, really, firstly informed, but secondly, in the most tax optimal position.
Right. And in terms of becoming tax resident in Portugal, assuming some people are going long term, is that simply a matter of more than 183 days, or are there other provisions within the Portugals?
Yeah, I mean, the main thing is 183 days in Portugal in any calendar year, because the calendar year is the tax year in Portugal from the 1st of January to the 31st of December. And in Portugal, it's self-declaration. So you need to actually declare with what's called finances here, which is the tax office, that you are living here and that you are tax resident.
And one of the points that I heard from somebody is that it's always important to remember holidays you might have in that tax year are not just when you arrive. So say you arrive on the sort of 3rd of July or whatever, thinking you're therefore not going to be tax resident here, but forget you spent 3 weeks on holiday in March or something.
People can forget that. People can forget that. Absolutely.
And
people should be counting their days anyway, because UK nationals, of course, with Brexit, can only spend an average, or can only spend 90 days in any 180-day rolling period if they don't become a resident here. So you need to count your days when visiting anyway. But yes, bear that in mind when you're actually looking to become tax resident, without a doubt.
And so when do you start paying tax in Portugal once you become resident?
Well, the UK and Portugal operate split-year tax treatment, meaning that really once you've arrived in Portugal and once you've informed finances that you are tax resident, from then on you will be deemed tax resident in Portugal. And that year that you leave the UK tax net and move to Portugal, there will be split-year tax treatment, which means that you will pay tax in the UK on all income and gains arising up to the date you leave the UK. And then from the date you leave the UK and become a tax resident in Portugal, any incomes and gains arising thereafter are taxed in Portugal. So hence, the following year after leaving, you will submit 2 tax returns, one to the UK for that part of the split-year tax treatment and one to Portugal. So yes, you'll need accountants both sides of the fence to help you with that.
And in terms of that tax residence, does that mean that you become liable to tax on income worldwide or just in Portugal?
Worldwide. So once you're a Portuguese tax resident, your worldwide income and gains are taxed in Portugal. So to give you an example, drawing down from your UK pension, even though it is a UK pension, and even if you're drawing down into a UK bank account, once you're tax resident in Portugal, the tax on that is due in Portugal. It's the same with your investments. If you're drawing down from, I don't know, UK ISAs or investment funds, then once you're a Portuguese tax resident, the tax on those income and gains are due in Portugal, not the UK.
Right. Okay. And you mentioned the tax-free lump sum, and that if you take that once you become tax residents, then that becomes taxable, whereas it's tax-free in the UK. Is that correct?
Yeah. Portugal don't recognise pension commensurate lump sums because that's a very much a UK idea. So once you become tax resident in Portugal, and I'm sure we'll come on to the non-habitual residency, the taxation and the benefits, but once you become tax resident in Portugal, even if you take a pension commensurate lump sum, and it's deemed a PCLS in the UK, Portugal will tax it as the same as everything else.
Right. Okay. And in terms of those pensions, I understand there are some exceptions for government pensions. How does that work?
Civil service pensions and some NHS pensions are always taxed in the UK, even after leaving, taxed at source. So most other pensions, apart from civil service and some NHS pensions, once you've left the UK and you draw down from it, it's taxed in Portugal. And if you've informed the UK you've left the UK and have an NT tax code in the UK will pay that gross tax. However, with the civil service and some NHS pensions, there'll always be retention at source in the UK.
Right. Okay. And what about ISAs and premium bonds? What's the implications there? Because obviously they're tax-free in the UK, but
yeah. So premium bonds, Portugal treat them as winnings and tax that. I mean, Portugal as winnings, and that'd be taxed in Portugal, even though they're UK premium bonds as tax resident. And Portugal don't recognise ISAs. So if you move to Portugal, sell your ISAs down as a Portuguese tax resident, then in a sense there was no point funding the ISA, because when you sell it down, the full amount, they'll have a look through of the ISA wrapping and they'll tax that at Portuguese capital gains at 28%. So part of the advice that we offer in the strategic financial planning advice is, in many cases, it's advisable for people to sell those ISAs before they step out of the UK tax net, to in a sense, start in a tax neutral position in Portugal. But please remember, advice is needed on that because everyone's situation is different.
Yeah. Okay. Now, the one of the big things that people are aware of in Portugal is the Non Habitual Residence Scheme, and obviously that has many attractions. So perhaps could you outline how that works and what the pros and cons are?
Yeah, absolutely. So the Non Habitual Residency regime came in back in 2009 when Portugal was at really the height of the global financial crisis back then. Portugal had just had a bailout from the Troika, and it was a way of, in a sense, attracting wealthy, or two types of people, wealthy retirees to Portugal, and also people that are working that have what they deem a high value added activity with their work. And the idea is that if you move to Portugal and you haven't been tax resident in the previous 5 years, so you haven't been an habitual resident in the previous 5 years, when you move to Portugal, for 10 years, you can get this special NHR status. And what that means is for 10 years, for drawing down from UK pensions, there's a flat tax rate of 10%. For non-Portuguese investment income, it's 0. It's what's called exempt with progression. And for working here in Portugal with a high value added activity, there's a flat income tax rate of 20%, which is quite attractive considering that the scale rates of tax here can go up to 48%. So yeah, it's certainly for those of you looking to move here, if either you have pension income or you have a high value added activity, Portugal is very, very attractive. And there are other tax benefits as well that we can come on to, I'm sure, but that's NHR. And really on the pension side, for many pensioners moving here, to have 10 years of low tax 10% on your pensions and be able to plan for that, that also allows you to plan post NHR as well, using the right investment type structures to post NHR, make sure you keep your tax base very, very low and drawing down from your wealth.
Right. And so once you get to the end of that 10 years, are there any specific things that people should be thinking about? Or
Yeah. So advice needs to be taken about possibly drawing down more of the pension and rolling into something more tax efficient post NHR, but definitely advice needs to be on that, because taking money out of a pension puts it back into your estate for inheritance tax purposes. But what many of our clients do is they fund Portuguese type ISAs, which in a sense are Portuguese investment products, where they're capital gains tax shelters, where if you roll up those income and gains and hold them for the NHR period, post NHR, you can draw down from these and pay very, very little tax going forward, to make sure that really it's a low tax base post NHR. So Portugal have their own versions of these incentives on investments.
and so are there any other sort of structures that can help people minimize their tax other than the NHR?
Well, the main ones are the pensions and as I mentioned, these type of Portuguese ISAs. As I say, dividends tax-free for 10 years. Some people also, if they have UK limited companies and move to Portugal, and if they're shareholders of that UK limited company, they can draw down from those dividends from UK limited companies tax-free in Portugal for 10 years as well. So there's a lot of planning around that as well. Right.
Okay. Perhaps we could sort of move on to property. Many people will retain their UK property when they move to Portugal, either somewhere they can move back to if things turn out to be less attractive than they expected, or family situation changes, etc., or simply as a continuing investment in the UK property market and so on. So what happens if they decide to sell that property after they've moved to Portugal?
Yeah, so selling a UK property, of course, still living in the UK, being your principal private residence, it is capital gains tax free. It's called principal private residence relief. But once you leave the UK and move to Portugal and become a resident in Portugal, that UK property cannot be your principal private residence anymore, because you can't be deemed living there. So as a non-resident of the UK selling UK property, you would pay capital gains tax on the uplift in value since April 2015. Because April 2015 was when the then Chancellor of the Exchequer, George Osborne, changed the law for UK non-residents and UK capital gains tax. Because previous to that, it was tax-free. So, you know, there's also relief on since April 2015 on the years you've been living in the property. However, it's clearly more tax efficient to sell a UK property while it's still your principal private residence.
Right. And I think one piece of advice, and tell me if I'm wrong, is that you can, from a sort of gains point of view, sell the property in the UK and buy a new one, because then you get the starting point sort of at the point that you're moving to Portugal, rather than having.
Absolutely. If you buy a new property, then the start date and start amount on any potential forward capital gains as you set the clock to zero. So yes, that does make sense.
Yeah. Okay. And from the income side, if you choose to let out your UK property instead of selling it, how will that be taxed? Will that be taxed in the UK, Portugal, both? Yeah,
property is different than everything else. So I mentioned earlier in this webinar that UK pensions and investments, even if you move to Portugal, they're taxed in Portugal. However, even if you move to Portugal, property is the one anomaly. That property, it's taxed what we call in situ, which is sitting in the ground. So UK property, if you take a rental income from it and you're a Portuguese tax resident, that's still taxed in the UK, and you have to file every year a UK non-resident tax return and put that property rental income on there. Okay. And what about in Portugal? Is it taxed in Portugal? Well, under NHR, there's no further taxation in Portugal on UK property rental income. Okay. Yeah. But if say for one reason you're not, once you're not under NHR, is it then taxable or not? It is, only if Portugal taxes at a higher rate. So if the UK taxed it at a lower rate and you didn't have NHR, you would pay the difference in Portugal up to 28%, which is what Portugal tax property rental income.
Okay. And are there any other sort of issues with holding on to the UK property? Does that create any problems with domicile or anything like that?
It does, actually. So domicile was a separate conversation, but domicile has everything to do with inheritance tax. So if you are deemed a UK domicile upon your demise, then your worldwide estate is taxed under UK inheritance tax. Now, Portugal has no inheritance tax. So if you break your UK domicile of origin, obtain a Portuguese domicile of choice, there is no inheritance tax for passing down assets to your children. Okay, Portugal has a form of death duty, which is stamp duty on inheritance, but that is not for passing assets direct down to children. So if you keep it inside the family. However, keeping UK property means that in many cases would tie you to the UK for domicile purposes. So for those people that are looking to stay away from the UK long term, or move into Portugal long term, retire there and live in Portugal for the rest of their life, holding UK property can, and the word is can, of course, affect their UK domicile position.
Okay, so in terms of inheritance tax, you say that there's no inheritance tax in Portugal. How does the stamp duty work? Is that a very low rate, or? It's
a 10%. So stamp duty, it's territorial, first of all, so it's only for assets in Portugal, and that 10% is only for leaving assets to anyone outside the direct family unit. And interestingly, different than UK inheritance tax, UK inheritance tax is the estate pays that inheritance tax before the heirs can inherit. Portuguese stamp duty on inheritance is paid by the heir when receiving at 10%. Right.
And in terms of, so I mean, for many people, it's actually going to be UK inheritance tax that becomes the issue. You talked about a property, but my understanding, one of your colleagues said that it can be difficult to get rid of that domicile, and that even if you've got a graveyard sort of set for your future use or whatever, can do that. So how do people get rid of that sort of UK domicile?
Yeah, it is difficult. And of course, it requires specialist advice. It's advice that we do provide at Blevins Franks. But you know, ridding yourself of your UK domicile of origin, it's very much cutting off ties with the UK. It doesn't mean you can't visit the UK. It doesn't mean you can't leave a UK or keep a UK passport. It just means that really your homeland being very much Portugal. It means, you know, joining clubs and societies in Portugal, owning property in Portugal, having your life here, and having very, very few assets out of the UK, or sorry, having very few assets in the UK, should I say, to show that your homeland is Portugal and not the UK. This is an area, it's complicated, and it does require advice. And at Blevins Franks, we have a domicile determination service that we do provide for those long term. And really, it could be the biggest tax saving people make. I mean, one thing is low tax on pensions and dividends in Portugal for 10 years. But if you compare the fact that inheritance tax at 40% above the nil rate band of people's estate can be pretty hefty in the UK, and if it's zero in Portugal, then as you can see, there's quite a big planning opportunity there, and quite a bit of tax saving to be made with the right planning advice.
Okay, thank you. We've got a question here for somebody. What are the differences in the income tax rates in Portugal compared to the UK? Are they generally higher or lower?
Well, the highest rate is higher at 48%. Okay, and there is a surcharge above that can take it up to a little bit higher than that to sort of, I think it's about 51%. But the scale rates in Portugal start at 14.5%. And go all the way up to 48. So there's more bands than the UK. So in general, yes, income tax here is pretty high. But please remember, for high value added, it's lower at 20%.
Right.
Okay. Social security here also can be higher, like in France as well. So.
Right. Okay. Well, that's the only questions we have. So I think we'll call it a day there. Thank you very much. I'll just finish by saying thank you for listening to everybody. Thank you, Matthew. I have already said, if you have any questions, if you want a referral to either Matthew or to other people, then you can always contact us at expats@expatnetwork.com. Matthew, what's the best way of getting in contact with you if people have questions or want to?
Well, I don't know if you're going to leave my email address on afterwards, but my email address is matthew.chrisman@blevinsranks.com. If you want to send me an email, or if you want to go onto our website, which is www.blevinsranks.com. You'll find me under the Portugal section. If you want to get in touch, then of course I can answer any questions you have.
Okay, many thanks, and thank you again, Matthew. Cheers.
Thank you, Nigel.
Bye.
Bye-bye.